Hello, everybody. I'm wondering if anyone can actually see me right now. This is my first time doing live on YouTube through a different program. So hopefully this works out. As some of you know, that I usually do my um, Bay Area housing market town hall webinar on the second or third Tuesday every single month. And this time I'm trying to do it just kind of impromptu, just because of the fact that I see so much changes these days, and I kind of cannot really wait. And I really want to show you guys some of the statistics that I've been running. So if I'm not gonna make you guys wait, I just want to show you guys these statistics, and hopefully you guys can find it fascinating. And of course, with all these news about the inflation and mortgage rates have gone up quite a bit, I think people are pretty nervous right now. So I want to talk about that. And if you guys have any kind of comments, feel free to post it and, like type up your comments so that maybe I can answer them, or maybe we can have a discussion about it. And later on, as a matter of fact, at 5:30 though, we do have a Zoom meet. I am inviting a friend of mine, Johnny Camus. He is running for Santa Clara County District 1 Supervisor. So I just want to ask him a lot of questions, and I think this is going to be quite intimate. It's going to be a small group. So if you are interested, go on to our website, halengroup.com, and then register for the event. And at 5:30 to 6:30, you get to talk face to face with Johnny Camus. So I'll see you there. But in the meantime, if you have already subscribed to our channel, please continue to come back and check out for more new videos. If you have not subscribed yet, please do subscribe. And then if we have any other new videos that pop up, we are going to share with you. I will edit this whole housing market updates so that you guys can have more condensed version. I know sometimes you don't want to watch such a long video. All right, so with this new program, hopefully I can make this work. There you go. I'm going to share my slides with you guys. There, I see that it's working now. Now, this is specifically for Bay Area housing market. So there are these stats that I've been sharing every single month. And the first thing is like, I combine Santa Clara, San Mateo, Alameda, and Contra Costa counties, and then look at their month of inventory. If you have not seen my past videos, I've been mentioned that a normal month of inventory market, it usually is around 4 to 6 months, and we've been on this like really low inventory for a long time now. And as you see that since January, it was like 1 month, and back then, or even 0.7 in March. And literally at the time, whatever comes to the market, I'm sure a lot of you, if you're from the Bay Area, you know, you go on you go to the open house on Saturday and Sunday. You have to make an offer by Tuesday or Wednesday. If a listing is on the market for 2 weekends, you find it is very odd. So now, actually, most of the buyers, they want to wait 2 weekends before they even make a decision whether they want to make an offer or not on the property. So we definitely have seen such a drastic increase in terms of the inventory, especially summer has been really slow. So we have all this accumulation of the inventory. Now we have about 4.6 months of inventory as of today. Now, if we look at how many days in the market, meaning days on the market has gone up quite drastically as well compared to early this year, from 7 days, just about a week, all the way to 19 days, almost 3 weeks time period. So it is really good for the buyers right now. And as a matter of fact, since January, I remember January we came on the market. I was really excited, and I saw like these lines of people waiting outside of these open houses, because part of it is not really because of COVID protocol. It was literally that packed. So there were lines outside of these open houses. But we actually have already been telling our clients, like, look, by June, the market is going to slow down quite a bit. We really believe that this summer is going to be a great time to buy. So we definitely have seen really huge slowdown on the market, because a lot of people onto the trip, and they were really worried about the interest rate has gone up so fast, so quickly, and the inflation, all the negative news, right? So we literally saw a abrupt stop on the market. So right now we are 19 days on the market, so you definitely have time to think about whether you want to make an offer on the property or not. And we definitely see our clients a lot more pickier, choosier. They get to say like, hey, I don't like this one thing about this property. I'm going to wait now. I'm going to wait for the perfect property to come onto the market. So we definitely have our clients get to choose, get to take their time to choose the perfect home for them instead of like just going in to buy something that's not perfect for them. So of course, it reflects back to the sales price to list price ratio. In the beginning of the first half of the year, we definitely see over 14%. This is again is a median sales price to list price ratio across 4 counties, and they're still 14%. And some of the area we've seen like 25-30% over, right? And now it goes down to only about 1.3%. It's still above asking price, believe it or not. So what we notice right now is that the buyers, a lot of times, even if they're multiple offers, but then we see half of the buyers probably make offer below asking, and then the other half would make offer at or slightly above asking. So buyers are much more conservative when they make an offer nowadays. Now, in terms of like how many listings have withdrawn, we saw like a steady increase, like from January, February, March. It just kept going higher and higher as the interest rate shot up. It just boom, from 135 to 298 listings in Santa Clara, and then 404 in June. This is the period of time where the news haven't really started talking about the slowdown yet, but us being on the ground, like doing open houses, we really saw huge decrease of the open house traffic. Went from people lining up outside the house to, oh my gosh, there was like 0 to 3-4 people coming in at the most. I remember those days that when we did our open houses, we were calling all these agents, right, neighboring agents, and it's like, hey, how did you guys do with your open houses? And everyone was just talking about like, man, we don't have people coming in. So May and June, we really already start seeing a huge slowdown of the market. And so that's why at the time, seller will put it on the market, thinking, hoping that they still have multiple offers, but then they didn't. So a lot of them started to withdraw their listings, saying like, okay, I'm going to pull it off the market. I'm going to wait until the market recovers, then I'll sell. And a lot of them actually move from the being on the market to sell to rent the property out. And the rental market is really hot, so it's been real easy for them to rent out their properties as well. So again, go back to these numbers, is that we start seeing a huge number of increase during the month of May and June, and kind of July and August is starting to come back down slightly, just because of the fact that we have less seller, I should say the inventory has come down. We have less seller coming on the market, and at the same time, our sellers are typically now starting to see the market is slowing down. But there are some that, of course, if let's say if they have sold their property or if they have moved, they really want to sell, they would try to keep it on the market, and then if nothing's going on, then they will pull off the market. It's really common. We've been seeing that over and over again. And August is pretty much a time where, as you see, Alameda, we have 510 listings that pull out of market. So that's quite a huge increase in terms of the numbers for Alameda County and Contra Costa County. And September, right now, as of today, is just almost exactly half month, and we have about 142 for Santa Clara County. San Mateo, we only have 58, which looks pretty good. Alameda County, we have 197, and Contra Costa County has 165 listings. So these numbers look like they're less than half of what we had in August. So let's see. Let's see if September is a better month or not. All right. Oh, oops, sorry. Go back to the slideshow. And oh, I'm a little late on this boxes. All right, let's look at list price decrease. And, you know, we've been tracking this every single month, and you saw same thing, right? In July, huge number of listings dropping their price. July and August, those 2 months, we really saw that buyers, they are waiting. They were just waiting for the sellers to drop their prices. And by most of these homes, pretty much kind of like when they came on the market in May and June, nothing's going on, so they had to decrease, have their list price decrease. So this is a huge drastic number change from 32 in January or 37 in February to 688 listings in August that have dropped their prices. So, and a lot, this is very common. We see this across the board that unless the property is in a perfect location, has completely remodeled, and a great floor plan, typically we see these properties will stay on the market a little bit longer, and then eventually they drop the price before buyers would actually take action and make an offer. All right, so this chart I thought is really interesting because I wanted to show you guys a few things, not only to see the supply and demand, but also wanted to show you guys where we were in the last 5 years around July timeframe. So if you look at, first of all, if you look at the green line is pretty much we can say is the supply rate, number of active listings, versus the blue line is the number of sales, and that kind of representing the demand. Then you'll see that in 2018, kind of like the second quarter all the way to about like second quarter of 2020, we have more supply compared to the demand. And so the green line is always way above the way above the demand. So then after, so July, this is the time when we had the COVID shutdown. This is around like the beginning of the year, March to May. And then even to July, people weren't sure what's going on with the market. But then after July, we started to see that, okay, interest rate has come down. So people were just starting to come to the market and buy. So that's when you see this, like the active number of sales, sorry, the number of sales shot up way above the number of actives. And that's why you saw the pricing have gone up so high. And then, of course, and starting in about June, May and June of this year, you start seeing that reverse situation again, where the supply is much higher than the demand because the interest rate has shot up. But what I want to show you guys is actually these points. These are the July numbers each year in the last, basically since 2017. And so you see that the demand, I'm trying to point out uh, um, the demand for each year. The demand this year is way lower compared to all the other years, mainly because interest rate has gone up so much. And on the other hand, is that what I want to show you guys is like, okay, usually in the July, after July, the demand also come down towards the end of the year, right? We always talk about, starting summer, the demand kind of slowed down. And 2018 actually comes up a little bit, and then it starts slowing down again to December, and then of course slowest will be in January, and then it start picking back up again. And it's same thing for 2019, same thing for 2020, same thing for 2021, and but it's different. In August, we actually kind of came up with a number of sales in August. So I thought it's a little interesting. I mean, we probably kind of like 2018. If you, I'm not sure if some of you are on the market or not, but when we, in 2018, the market actually continued to go up, but it slowed down. And in 2019, the market actually came down. So our market was a bit slow in 2019, and everybody was kind of waiting for the market to crash at the time. But obviously we knew that at the time, 2020, the market never crashed. So what I find interesting here is because this is really literally what we're seeing right now recently. Although we saw that like we have more transaction fell through for the last few months, we actually started seeing less transaction fell through. Starting September 1st to September 14th, there's only 70 We are half a month already, but then we are way less than half of what we had back in August 2022. And on top of that, you see in August and September right now, for Santa Clara County, Alameda County, and also Contra Costa County, our median sales price actually higher than August. Besides the fact that San Mateo County we have a slightly lower on the median sales price. So month to month increase for Santa Clara County, Alameda County, and Contra Costa County. And the year over year, we see that Santa Clara County actually is still higher than last year number. And Contra Costa County is still higher than last year number, but San Mateo and Alameda County is lower than last year's median sales price. And on top of that, this is where we've been working on our offers. We've been making offers for our clients. All of a sudden we saw a surge of buyers coming back as soon as the summer was over, and oh my gosh, we were just like making offers, and I was like, man, every single time we make an offer, it seems like there are multiple offers or we have to rush into it, otherwise like we're going to be competing with other people. We saw more people at open houses. It's not as crazy again as beginning of the year, but we started seeing more like 10, 15, 20 people per day, open house day. So it would be about 30 to even 50 parties over the weekend. So people are coming back to look at open houses. And for example, San Jose 95129, these are West San Jose area with Cupertino schools. They have great location, and some of these homes actually they either have really good floor plan or they may not be completely remodeled, but they have good school, good location, good floor plan, may not be completely remodeled, or some of them have been entirely remodeled, and they have double digits offers now. We haven't seen this for about 4 years, 5 years already. So now it's interesting. We're starting seeing double digit number of offers back on the market. So and then even Campbell here, we had 7 offers. And although Sunnyvale like Fixer, this is only 3 offers, and but still they have multiple offers. But you see that it just sold at $1.2 million, and even though with that multiple offers, so that, like I said, like a lot of times we see that a lot of people still making offers below asking price, and then some of the people they make offer at asking price or price for slightly above asking price. And oops. All right. I actually didn't mean to look at that, but I want to look at the mortgage rate projections. This is a little bit crazy when I look at this. Every month we kind of track these numbers, and Freddie Mac, their numbers are this. Well, they only have July, so it's the same numbers as last month. What I've shown you, but as you see that this is a numbers I'm tracking from April 22nd versus July 22nd, 2022, July 2022. And Fannie Mae, we had last month, July and versus August, they had dropped their projections quite a bit, which is good for consumers. They went from 5.4 that they're projecting for 4Q to 4.8. Knowing where the market is right now, I'm not sure the projection is actually that accurate. I would be very surprised that it's going below 5%. They are projecting that by, I mean, basically 4Q is the highest, and then starting next year is going to start coming down 4.7, 4.5 to 4.4% in 2023 3Q. I would say I kind of see that we probably would top out on the mortgage rate by end of this year, but I just don't know if I would agree with Fannie Mae their projections that the rate would drop below 5%. I was double checking their report. I thought I looked at the wrong year, and but then sure enough, yeah, they really adjusted the projections quite a bit in just 1 month. They basically saying like, hey, we used to think that it's going to go up to 5.4, now we think that it's only going to be 4.8 for 4Q. So we'll see. But everyone else is still kind of above 5, especially National Association of Realtors. This is a pretty drastic change as well. This is like the other way around. They went, usually they are pretty kind of similar on the numbers, but this time look at that. Fannie Mae went from 5.4 to 4.8, and on the other hand, NAR, National Association of Realtors, went from 5.3 in April to 6.0 in July. That's their projection. So now they think that 4Q 2022 we're going to hit 6.0. 1Q same thing, as well as 2Q is pretty much going to stay at 6% mortgage rate, which I think for conforming loans most likely, but jumbo loan is actually a little bit lower. I think jumbo loan is probably going to stay right around 5.2. I really think typically Mortgage Bankers Association, their projections seems to be the closest to reality. So I'm going to stick with like following these numbers instead of NAR or Fannie Mae. I just thought Fannie Mae is a bit too aggressive on their projections here. But either way, average of the four is 5.4% for 4Q 2022. 1Q 2023 will be 5.3. 2Q 2023 is 5.2, and 3Q 2023 is about 4.8%. All right. So some of the news that came out is, of course, we hear inflation has been remained stubbornly high in August and rattling consumers, investors, and that's why the stock market kind of, had a really, really huge reaction yesterday. As we started seeing, like I told you earlier, we started seeing more buyers came out in the market, and then yesterday, boom, the Dow kind of went down so much. So we'll see what people are planning on doing, but then so far our buyers are still continuing to look at properties. We haven't heard anything from our clients that they want to back up right now based on yesterday's news. Okay, so here is by Jana Smielek, and this is from New York Times. And she said, so far there is a little sign that the Fed's efforts are tanking consumer and business demand. Growth has slowed, but it has not plummeted, and both hiring and wage gains remain rapid. That's exactly what we're seeing right now. Still, it's basically companies still need to hire. It's not like companies are laying off rapidly, but they are still trying to add more people into the employment, and they can't really hire people. They can't find people to employ. Employers added 315,000 jobs last month. Job openings remain high, and consumer spending has continued to eke out gains by decelerating ones this summer. And inflation remains hot. Financial conditions have seen some improvement, and the labor markets are humming along. So we see that basically it's like they're trying to slow things down, but at the same time, our market seems to be doing so well. So the Fed basically is like they are trying to put out these news almost. To me, it feels like they really purposely trying to put some fear into the market to slow down the economy right now. And I was just watching this YouTube video through CNBC, and it was quite interesting because like they show some charts about the core and housing inflation, because as you know that our inflation has gone up quite a bit, but at the same time inflation does include housing costs but does not include home prices. So for example, the rents, they include the rents, and so and everything else is pretty much they include the food, energy, and a lot of other stuff, right? Consumer products, right? But at the same time, they don't include the housing prices. So even though the housing prices have gone up a lot, they didn't count that in, but they do count the rents that they're paying. So it says that on housing services, I expect to see sizable increases in this component of inflation for a while, as the recent rise in new rentals make its way into aggregate price measures. And this is interesting because, like I mentioned earlier, a lot of our sellers would decide that, hey, right now we need to pull it off market. We have all these withdrawn, canceled listings or price decrease. And instead of saying like, I'm just going to keep them vacant, they're going to put it on the rental market, and they rent it out just like that. So they are actually doing pretty well by renting it out, and the price is not coming down either. And in terms of the job market, again, the job is actually, the unemployment rate continued to look pretty good, and then the hourly wage actually is still going up. So these data we've been talking about for months again is like still going is doing pretty well. Our economy is still doing pretty well, and the Fed is really trying so hard to kind of slowing it down. The gas prices did come down a little bit, yeah, come down quite a bit last month, but it's still not enough to slow down the economy. And this is a chart where we're seeing the rent for San Jose area, as you see that it's like continue to go up. It's not really coming down much. Especially starting from September 2021, we see that it has a pretty steady increase, and it starts slow down September now. That's what we're seeing, that the rents are slowing down, but it's still not there yet. So I thought this is something that I really, thought is real interesting to see for you guys, to share this with you guys, because um, I was trying to figure out, what is going on with this market, because so many people are wondering. So should we rent or should we continue to buy? And then should we move out of California, because like California seems to be a place that a lot of people are losing hope. But I've been telling everyone that I really have a lot of confidence with our San Jose market, or even Silicon Valley market. And here are some reports that I want to show you guys here. Here we go. From CoStar, and CoStar talk about the San Jose multifamily market, and they also have mentioned that major employers beginning to have employees return to offices, and residents who may have left before, now they are returning. And for example, some submarkets like such as Sunnyvale, Mountain View, and downtown San Jose, they are growing rapidly, including Santa Clara as well. And so this one, I want to kind of residential 1 to 4 units compared to multifamily, which is 5+ units. They are kind of, have they're interrelated, right? And we see that residential market, when the purchases and sales not doing very well, the rental market is actually doing pretty good. It's not like they both coming down. It's like, oh, okay, if you cannot sell them, we'll rent. So the rental market for a lot of landlords right now, they're doing really well. Some of our investors think that because the interest rate, well, typically, if the interest rate has gone up, let me come back to the screen. Typically, if the interest rate has gone up, then that means the cap rate has gone up. And with the cap rate going up, the valuation of multifamily will come down. And if you're new to multifamily, it's one of my biggest passion with multifamily. I love multifamily investing because it's just so interesting. And what's so interesting about this one right now is because the rental market is so strong, the vacancy is so strong, strong meaning like very, very low. Right now, you would think that, okay, because the interest has gone up, the cap rate should be going up, and hence the pricing is coming down. But multifamily is actually not coming down. They are still selling at very, very similar cap rate as before. About depends on the area. We still see 4% cap rate in San Jose, downtown San Jose area, of maybe 4.5. San Francisco used to sell like 1, 2, 3 cap, and now we still see about 3 cap and 4.5 cap, somewhere around there. So, but then with the increase of the rent, actually has been helping out a lot. So I think conclusion right now today to share with you guys about these statistics is that I think our market was trying to improve for sure. It's like as soon as the summer was over, so many buyers came back, literally saying, "We are ready now. We hear that the price have dropped. We want to come back in." Now, as for sellers, some of them right now at this moment they're probably getting very anxious, and if they get offers, they just want to accept it. And I think they absolutely should right now. This is not the time to really try to get this price that you think you can get back in April. It hasn't gone back to that pricing at all. I don't even think that it's going to go back this year at all. Despite we have more buyers coming on the market, they are still very conservative in terms of how much they're willing to offer. Even though you have 11 offers, half of those, like I said again, is that they offer slightly below asking price, because there are still buyers out there believe that they can get a deal right now. But then for those people who are really truly trying to find a home and want to lock in the rate right now because they worry the rate might go up, they will make an offer, a slightly more aggressive offer above asking price. Just remember, as long as you can qualify for the monthly payment, I do think that this is a great time to buy because the price have gone up. The prices have gone down. But if next year, starting in January, I do believe that starting in January, we're gonna see a lot more activities starting next year. So if you're a buyer, you want to buy right now, this is a time where you can negotiate more with the seller. And I think in January, you're going to start seeing like, oh my gosh, I still have to compete with quite a few people. You're going to see a lot more demand out there. But the interest rate is probably going to start to come down a little bit. So if you buy now at a higher interest rate, there's no prepayment penalty for your loan. You can refinance next year. So once the interest rate comes down, you can definitely refinance. So we always say you married to the house, but you're just dating the interest rate, unfortunately. So you are not tied to the interest rate. You can always refinance and get a new one. But the house is the most important thing. So if you find the one that you really like, you should definitely make your best offer possible. And as for investors, if you're looking for multifamily, I know the inventory is so low right now, and we've been having very low inventory, especially in Silicon Valley, mainly because the rents have been doing so well. So that's why a lot of landlords, if it's not because that maybe because of inheritance, or they're running out of money to maintain the property, typically they don't want to sell. But then be patient. If you see one that you feel like this is a great one, you might be making the cash flow might be very low right now, but the projections of the rent increase is actually really healthy, especially because the job market over here in Silicon Valley is a lot more healthier compared to a lot of markets out in other part of the country. So hopefully today's market stats helped you guys to make the right decision for your real estate investments or your home purchase and sales. If you guys have any questions, feel free to give us a call. And again, this is the first time I'm using this new software, so I feel a little bit weird to do this right now. But next time, next month, hopefully I have some more practice. And then if you're available at 5:30, please do join me to talk to Johnny Camus and see what he can do for our Santa Clara County to make our place a better place for everybody. And also, most importantly, it's a safe place to live. All right, see you guys. Bye.